Ethereum, again, if you get the merge to go smoothly, you might get a little bit of relief. I think it's short-lived, but I do think, again, you might get a little bit of relief back up. Maybe the 200 MA is one thing I'm looking. I mean, this would be a best-case scenario to touch that 200 MA. It's also kind of a double top. But again, it's tricky now that the CPI number did what it did. Yeah, I mean, I think that we got to get through this merge, assuming the merge goes smoothly, everything goes smoothly. I think that's going to be a positive for crypto. For me, it's if you're a swing trader, I think there's opportunities off key support lines, but you still have to be careful. I still think that you know, the crypto market's down about, what, 70% off of its highs for Bitcoin. In every past cycle, you've done 80 to 85% drops,
That's right.
and that's with the Fed printing money. Here, the Fed's doing the opposite. They're unprinting. Wow. They're sucking money out of the system. So why wouldn't we do 85 at minimum in this cycle, which puts us down, I mean, at minimum to 12,000, 13,000. And so remember, people said don't fight the Fed when the markets were going up, which was the right move. Well, now they're doing the opposite. So when not fighting the Fed, be very cautious on risk assets here. I agree 100%. You know, my worst case scenario, and again, 12 to 13,000 is kind of my gravy zone. That's my high end target. But I could see 3,500. That would be a 95% decline, and that would basically align us with what Amazon did in the .com bubble collapse. So again, think of the behemoth Amazon. By the way, think of how awesome it did. If you bought it even at the highs of the .com bubble, you made a fortune in Amazon. I still think that's the way it's going to be for crypto. So if you're in at 69,000, it sucks right now, but I do think you'll end up making money. For those of us that have some dry powder, you have to think that when it gets to those lows, everyone is going to be freaking out. That's when you want to deploy some capital, obviously capital that you can risk. That is everything to do with the stock market and the crypto market. And I'll tell you one thing, markets have a funny way of forcing people's hands. And I wouldn't be surprised if crypto goes low enough where it causes Michael Saylor to kind of exit, like short, like basically a margin call or whatever it is. Right. And that could be the culmination of the bottom on Bitcoin. And again, I've been, you know, you and I have been traders, right? Doesn't the market just push you to your limits?
Yes.
And he's like the stereotypical, like, head honcho for crypto. It would make so much sense to push him to the limit, and then that would be the bottom.
Yeah. Or are we going to see something even bigger than that?
No, I think he's on point with 75. And the key is going into this number, honestly, I was in the 50 basis point camp because I mean, looking at gas prices, oil, copper, all these commodities have fallen dramatically. Yep. And so in my head, I'm like, okay, well, we should see that trickle through to the consumer price index. And we just did not. And I think the market got caught way off guard. The Fed now is locked in at 75. I think that's a no-brainer. The reason why I don't think there's 100 is because technically the Fed is really tightening additionally by unloading their balance sheet. So I believe in September, they started to reduce their balance sheet. Yeah. And by reducing their balance sheet, it's technically a tightening effect as well. So if they do 75, it probably, with the unloading of their balance sheet, it's the equivalent of 100 basis points. So market does not like it. Crypto doesn't like it. Stocks don't like it. It's just risk off all the way around. I mean, there's always a chance, right? But I think the biggest thing here is the Fed really, and this is what I've been, yelling at the top of my lungs, is the Fed has to be so careful here, because if they trigger a bad recession, ask yourself, how do we get out of that recession? Because every past recession we've gotten into over the last 10, 20 years, the Fed has printed us out of. And if inflation is as sticky as it looks, they can't do that in the future. And so if they trigger a bad recession, we may be stuck in that recession for years. And we may have stagflation, all these negatives. And I think that's a real thing. If I was on the Federal Reserve Board, which I'm not, but if I was, I would be saying, Jerome Powell, be careful here, because you go too hard and too heavy, you're going to trigger this recession, and then we can't get the economy out of that recession. Look, man, I mean, I tell you, you'd think just dumb luck would have them time something right, but they notoriously are just the worst at doing just right? They always overdo one way and then overdo the other way. And yeah, I mean, it's right. I mean, they gotta look at the data. They gotta just time the amount of rate hikes just right. So it's not an easy thing to do, but you know, in my opinion, I would, if I was Jerome Powell, I would do another 75, and then I'd sit back and wait multiple months to see the impact after a few months. Because if they keep on going gangbusters, there's no doubt they will cause a recession. Usually the way it works is that the markets after today's data, they're readjusting very, very quickly. There'll probably be an additional readjustment for the next couple days. And then by the time you get to Friday, the markets will probably be priced in to 75, maybe 100, and they'll just sit there and kind of go sideways until we get that data from the Federal Reserve. So the market is in that. So anytime the market gets information it didn't expect, it quickly tries to readjust to factor those expectations in. And then until it gets new information, it'll kind of hover around that level. So that's what I'm expecting, some volatility in the next few days, and then getting into a quiet period. And that's an issue. And I know you've traded for many, many years, but you know, you don't see a bottom until the VIX goes nuts, right? So like, you want to see 30% move in the VIX where you have that fear, and then you get a bottom. You know, 7% to me, I'm like, man, you know, that's not a bottom. What tells me is that the supply chain is still an issue. That's still keeping prices up. It also tells me wage pressures mean that companies have to charge more for their products because they're paying their employees so much more over the past 12 months. And all of these are then negating the drop in oil. I mean, imagine if oil was still at $120 a barrel, where we would be at that point.
Oh my God.
So, you know, it's definitely not a good position, and you can see from the market reaction, it freaked out the markets. I mean, this was, in terms of a trader's dream, this is what you love, but an investor, man, you just shake your head at it, and you kind of just look to fight another day.